This is John Paulamy of the Actionable Intelligence Alert. Today is Sunday, June 24th, 2018. And in today's video, I want to go over a possible contrarian theme, that being corn. Is corn contrarian? And everyone has to eat. I have short, medium, and long-term views on this. So first of all, I like this, what's called the periodic table of commodities. And this can be found on the U.S. Global Investors website, ran by Frank Holmes. For you guys that are involved in the commodity markets or resource investing, you should know who Frank Holmes is. He runs U.S. Global Investors. Anyway, they have this periodic table of commodities. And basically what it shows is each year across the horizontal at the top, and then the commodities, various commodities, how they perform that year. And you can go in here and play with it. It allows you to just isolate each commodity to show you how it did throughout the years. You can go into just agriculturals, metals, energy. So what I like to do is play around with this, and I was talking with some other folks that I know and got an email from an acquaintance of mine that's a commodity trader, and I started kind of thinking about agriculturals and how depressed they've been for the last few years. So I took a look at this periodic table of commodities, and what I found was that the corn price has been down for 5 years in a row, which I found interesting. So obviously when something has been down for years, 3 to 5 years, or in corn's case 5 years, it starts to pique my interest for several reasons. I mean, corn is used as the primary animal feed for the production of animal proteins. So it's very interesting to keep track of this because, as we know, or as a simple Google search will indicate, as world population grows and as that population becomes wealthier in a per capita way, diets change. Diets become less grain and vegetable orientated, and more caloric intake is from animal proteins. That's just the way it is. Everybody likes a tasty ribeye, whether you're in China or in Brooklyn, New York. So just because something's depressed, though, doesn't mean it's necessarily going to go up. We know that from the uranium market. It's been down for 7 or 8 years, and there's no end in sight to the bear market. We do know, though, that commodity markets eventually will turn around. It's just the nature of the business. And can we find a catalyst, or can we find a storyline that makes sense and that can lead to a price increase in the commodity we're looking at? So I think we have that shaping up, not just in corn, but all the grains, more so on a mid to long-term time frame. But nevertheless, I think I found a way to take advantage of this. So let's just take a look at corn just for the sake of this particular video. So one of the main catalysts for the corn price going forward is a recent announcement in the last year or so by the government in China. So the Chinese government used to subsidize corn farming in China. As a matter of fact, they at one time were paying twice the international price for corn to Chinese corn farmers. Of course, when you subsidize something at higher than the rate that you could buy it on international markets, it's no doubt that they got very huge corn inventories. So obviously, here we have another example of government intervention in a market and resulting in a not great outcome, huge amounts of corn being produced in China. So the Chinese government now has come up with the idea that one of the ways they'll reduce their corn inventories is to institute a national ethanol program, E10 ethanol policy nationwide, that's supposed to go into effect by 2020. Now, they had a test pilot program for ethanol in about 10 or 11 provinces, something like that. And now they're going to roll it out nationwide. This policy will result in ethanol consumption inside China quadrupling in the next 3 years, or 2 years. So the 2018 ethanol production forecast is little over 1 billion gallons in China. If China were to meet the 2020 national mandate of E10, it would require an additional 3.6 billion gallons of ethanol. So I think it's interesting because I think it's completely stupid and irrational to put large amounts of nitrogen, potassium, and various other phosphates into soils to grow corn that you burn in a gas tank. You have a tremendous amount of runoff from rain. It carries these chemicals into river systems. We've seen this in the United States where you get these algae blooms and waterways that are massively affected. But that's just the nature of government, so, you know, we're not going to fight the trend. We're just looking for the catalyst. So that's kind of a short-term catalyst for the corn price. But I think in the medium and long term, I think that there are some other things we need to look at in addition just to this ethanol policy. So here's a chart from the USDA, shows the Chinese meat consumption per capita, kilograms per person. And you can see from about 1980, it goes back to 1980 to current times and projections. This is an older chart, of course, but you can see the increase as the country has gotten wealthier. The consumption of animal-based proteins has increased consummate with the increase in their economy. You can see that primary animal protein preference in China is pork, followed by poultry, and then very little beef consumption. It hasn't really changed too much, but you can see the large increase in pork consumption. So this is interesting to note because actually if you go and do some research, you'll find that the Chinese government is trying to change preferences in China away from this increased meat consumption, just because of the fact of the grain consumption and the fact that China has to possibly be wed to international grain prices. So not to mention the lack of arable farmland in China and the increased amount of farmland would have to be devoted to corn consumption, or growing, excuse me. So not only that, there are dietary preferences starting to change among the younger urban dwellers. I've read some recent articles where they're trying to get away from a lot of these younger people in their 20s are not so enamored with pork dumplings and things of this nature. But, I mean, you're talking about over 1 billion people, and mostly these wealthy people, younger people that live in the coastal cities, or even in the interior and some of the larger cities on the rivers. That's not the entire population. So I would suspect that although meat consumption may slow down in China, I expect it to still grow over time. And this, of course, is more of a medium to long-term catalyst or cause and effect, if you will. So this is an interesting chart that I kind of put up here, or slide. It shows the grain requirements per pound of meat for the various animals. Takes 7 kilograms of grain to produce 1 kilogram of feedlot beef. 4 kilograms of grain to produce 1 kilogram of pork, 2 kilograms of grain to produce 1 kilogram, kilogram of chicken. This is a general rule, of course, because you can't make the mistake of just saying, okay, well, 7 kilograms of grain to produce 1 kilogram of beef, or 4 kilograms for pork. Let me put this into a spreadsheet with 1.3 billion Chinese, and if they increase their pork consumption by this much or beef consumption, this is what's going to happen. You can't necessarily do that. This is just a reference to show how much grain is actually required. And the animal protein story is not just a Chinese story. The entirety of Asia is becoming wealthier. One of the companies that I invest in Myanmar, i.e. Burma, Yoma Strategic Holdings, is the exclusive franchisee of KFCs in that country. 3 years ago, there were no fast food restaurants in Myanmar. Today, there are about 30 KFCs. You can imagine how much chicken is required per KFC. They're going to continue to grow that franchise, and I'm sure introduce additional franchises of fast food. I'm not saying that's a good or bad thing. It's probably not good for the health of the countries. But what I'm trying to explain to you is that as these countries, even some of the more poor countries in Asia, become wealthier, they will gravitate away from the traditional rice and vegetable diet and introduce additional animal proteins. And this is a long-term trend that's not going to change for many, many years. So you do have to be careful, though, like I said, about just extrapolating 7 kilograms of grain. For not all beef is grown, of course, or fattened in feedlots or finished in feedlots. There's an increasing trend to, especially in the West, to get away from feedlots, more farm to market, more raised on grass, no antibiotics, no growth hormone, these type of things. Obviously, if countries become wealthier, people can afford that. I'm actually an investor in a couple of these type of investments, with beef and chicken being grown predominantly without the use of antibiotics or feedlots or intensive farming. So that's an opportunity also, but that's kind of a sidebar. Like I said, this is a medium to long-term trend, and I don't think it's going to change. So here is another chart that I think is a long-term catalyst that people don't pay attention to, and this is basically the amount of arable land per person in the world. And you can see this chart goes back to like 1965, and at that time there was about 0.4 acres of arable land per person on Earth. Now if you go to 2018, it's slightly above 0.2. So in the span of about 50 years, we've seen the amount of arable land per person decline by 50%. Now this is a long-term trend that is actionable. I think if you're somebody that lives in any major metro area in the farming areas of the U.S. and the Midwest especially, Minnesota, Iowa, Illinois, these places, you can't help but notice as you leave these various metro areas into the suburbs how, 30, 40, 50 years ago, these suburbs didn't exist. They were, quite frankly, farms. And what we've seen happen over the decades is, as these cities have grown larger, they have encroached onto productive farmland where subdivisions and suburbs have been built. I'm currently working on a job in Chicago, and I'm just amazed about how far out some of the suburbs have moved to the west of the city. And there's nothing but prime corn growing and soybean growing land out there, and it's just constantly being developed into additional housing developments, shopping centers being paved over. So, once that happens, it's not reversed. And it's kind of interesting because this is very, very valuable farmland. I mean, you're talking, some of this stuff goes for 8 to 10 grand an acre to grow corn and soybeans. So I think that's something that you're seeing all around the world. And if you want to throw in climate change, which I'm not a climate change denier, you can go to my website. I actually think the Earth is going to be cooling, and we're going to have more intense bouts of rain and dryness around the world. That's going to exacerbate the shrinking acreage problem. But you know, these are issues that are, I believe, actionable in a medium to longer term time frame. In any one growing year, it's hard to tell what's going to happen. We've had bumper harvests, good growing conditions, so the corn price has been low. But what we've seen is, and I'll show it in a chart, next chart coming up, the stocks to use ratio has been declining. So here's a chart where I think shows some of the opportunity in the short term and medium term. This is a chart of price, which is in orange, juxtaposed with the stocks to use ratio of corn. So as you see, as the amount of corn in storage goes down over time, it's kind of inverse relationship. The price goes up, obviously, because you have less corn in storage. And you can see right there that it's amazing. Even though we've had some excellent corn harvests, the stocks to use ratio has declined to a point that's been lower than it has been in the last almost 20 years or 15 years. And yet the price has been basically in a sideways consolidation for the last 3-4 years. As I showed in the initial periodic table of commodities, the corn price has basically been down the last 5 years. So I think this is a short-term and a long and medium-term opportunity. But it's like everything else. When I say it's actionable, how do you play it? So obviously you can get involved in the futures market. For most people that are listening to this video, that certainly is not probably the best way to do it. Futures are very risky, or can be risky if you don't know what you're doing. I'm a sophisticated investor, and I really don't even play around with futures. They're kind of opaque, and with the high levels of margin, you really have to be on top of your game and really be a professional to be playing in that realm. There are some things, instruments or vehicles known as exchange traded notes. There's one for corn. I put the symbol here, CORN. But you have to be careful with these too, because depending if corn or with the commodity that you're involved with these ETNs is in backwardation or contango, and this are two terms I don't even want to get into. You'd have to research this on yourself. But depending as these ETNs roll their futures contracts, as previous ones expire and they roll into new ones on the forward curve, you could be actually losing value in of the ETN in a rising corn price market. So again, that's kind of something that you really have to read the 468 pages of whoever's sponsoring the ETN, Barclays or Goldman Sachs or whoever, and there's all kinds of little fine lines. You need to kind of be an attorney and an expert in accounting and law to figure out exactly what you actually own when you own an exchange traded note. So obviously, you know, I'm looking to play things that are longer term, 3 to 5 year movements in beaten down industries. And I think one of the things I really think you can take advantage of is the fertilizer industry. Now, the fertilizer industry has just been beaten down. It's just another commodity market that when prices were high several years ago, of course, what do people do that produce commodities in a high price commodity environment? They bring on additional production capacity. And that's what happened in the fertilizer industry. And of course, prices of just about every nutrient collapsed. So what we've seen are prices of the stocks that produce these various inputs like nitrogen, potash, potassium. They've really went down quite a bit. There is an ETF that's specific to agricultural inputs, fertilizers, and potash. It actually is, the symbol is SOIL, soil. That's easy to remember. But, and I think somebody that just wanted a hands-off 3 to 5 year horizon, they could make decent returns by just buying that ETF and forgetting about it. What I'm trying to do in Actionable Intelligence Alert, though, is try to identify the companies that have the ability to go up 3, 5, 10 times in value. So I'm currently researching the fertilizer industry, the agricultural input industry. I am looking for opportunities for, as this sector improves, as it recovers, and as we see this long-term trend of more people relying on less land to grow more grain-intensive harvest to supply the protein that people are demanding. So, like I said, this is a ongoing trend inside of another trend, if you will. The fertilizer market as a way by proxy to play this, and I am going to be doing some additional research into this and coming up with some ways to take advantage of this. Let me just show you one chart of the largest fertilizer or agricultural input company in the world. This is a long-term chart going back to 2008. Shows a company called Nutrien. Basically, this is a new name for a company that used to be called Agrium, and Agrium recently merged with Potash company, which is they're both Canadian companies based. I think the company's based in Saskatoon. But anyways, this is the largest basically agricultural input company in the world. They produce all types of agricultural fertilizers and inputs. They have a huge marketing and retail establishment. So this is kind of the proxy, if you will. And you can see that, you know, if you go back to 2008, when we had the financial collapse, this stock basically traded at about $160 a share. Obviously, it crashed during the financial crisis. I remember that well. It was trading down around 25 bucks a share. You see the from 2008, late 2008, 2009, up to another intermediate term peak in 2011 and 12, early 2012. It was a double top, and then it's been a long slide down to a low below $30 a share. Now you can see over the last several years the slight recovery in the stock. Now, like I said, this is a company that's the largest fertilizer and agricultural input company in the world. It's still down about 2/3 from its all-time high. So that just indicates some of the opportunity. There's other companies that are smaller around the world that have decreased even more, and quite a few of these companies are trading well below book value and are paying decent dividends. So I'll be doing more research into that and expounding upon that, and probably adding to my positions in the Actionable Intelligence Alert newsletter. So that's it for this week, guys. I hope that you enjoyed this video. I'm trying to point out some of these opportunities I think that most people aren't even talking about or even aware of. And take a look at this and do some research on your own, because I think, you know, this is a very interesting long-term phenomenon. As more people are, you know, coming on to the earth each year, it's 80 million new people a year, and the amount of farmland to support these people is shrinking. And so the only way to meet the agricultural needs will be intensive farming, which requires heavier and heavier agricultural inputs and fertilizers. So hope you enjoyed the video. Please subscribe. Take a look at Actionable Intelligence Alert. We have all kinds of great ways to take advantage of these asymmetric opportunities that we keep identifying. And we appreciate the feedback and comments, and keep them coming. And we'll talk to you next week. Thanks.